Alright, yeah, let's just go over some opportunities today. So this one was pretty obvious, but it just didn't pull back enough. So you had, this was in the morning, in crude, what do you see? You see market pullback and this big base forming. It had a lot of different elements. You had it come back here, it was holding base, high volume prints. You had a spring over here. And then from that spring, you had a change of behavior right there. And it was pretty apparent on this, it's a change of behavior. And over here, where it says COB, that's change of behavior, because it tapped a level. So I don't know where I got this one. This level somewhere. It marked over here, and it just went there and it reacted. So this is what happens. I've said multiple times that level comes first, right? Because these guys are planning their efforts around levels. So they're planning their accumulation around levels. Market pulls back, taps the level. Here you have your change of behavior, and then finally you have this. Once it breaks out here with this heavy volume, this is evidence that they're just buying. And it breaks over here. You had a POC before here, it was over here. On this level, it was 23,652 contracts, and it goes higher. Clearly, all you have to do is get it on a pullback, right? So, unfortunately, I tried, but it didn't pull back enough. And, well, that's the way that sometimes that's what happens. And then I just did all this. So, all right, next market. So that's the move in crude. This is the reaccumulation in crude. You know, rally, pull back, tap. If you want to see some other indications here, this was the first time right here that the market, like, look at this, 57.17. So the down volume shrinks, and the volume in the middle, which is the up volume, is 68. So selling is clearly weakened, and if you look at the buying volume, it went up from 21 to 68. Again, buying volume goes up from 21 to 68. Selling volume goes down from 57 to 17. So, I mean, after that, if you're still not convinced, just wait for that boom break on increasing volume. Here you have 7,400 contracts. So 7,400 contracts with this base and all the POC and supply decreasing and demand increasing. I mean, it's a no-brainer that demand is overtaken. If you want more evidence, what's the highest print over here in the bar? The bar is this, 24. Why? Because it's a breakout. And then does it have follow through? Yes, it does, by 2 bricks. That's legitimate breakout. You want more evidence? Look at the excessive buying from 4 to 8 to 24. Increasing buying. See that 4, 8, 24? When it does that from, you know, as it's going up, buying more, that's good. Especially with 3 prints in a row. So, I mean, the only problem is the damn thing didn't pull back to test. If it did, then 40. No, it didn't move. It didn't do it. So it did not. This was the low here. Went to 43. I forgot where I had my order, but it didn't get tapped. And then it goes higher and a base breakout. But here it's a little bit too high, a little bit frothy. And, I'm not sure what's going to happen here. But if you're long, your stops are going to be under the space. Alright, never mind. Let's go to the next market. Alright, so this market, it offered some nice sells. Yeah. So you have some shit over here, and then you had this clean break. See this break? So you have some congestion or POC or volume node or distribution, and then you had this break. So the break is very telling, okay? It goes down, and look how much, 181. All right, that's 18,100 contracts right there sold. I mean, why would you not look for a test? Now again, I'm not just taking signals and just trading. I need to, because signals by themselves, if anyone tries to sell you a quote unquote system, you know, it's all bullshit. 100% all bullshit. Because there's too much context and background and higher time frame that matters. So signal based, if someone says, okay, I have a signal, you know, red and green, all of them, whether they're based off of technical analysis, whether they're based off of order flow, whether they're based off of anything, will fail. Why? The context itself fails. The size of the range changes. The volatility changes. The volume environment changes. That's why you have to apply judgment, and then you can add signals, right? Like over here, I know for 1,810 contracts sold, breaks multiple lows, has this in the background, has high volume print over here and here, breaking the lows. It's no brainer. It's gonna, and then you just wait and you look at the first pullback. Look. I mean, are you kidding me? It's only 27. 181 down and 27 up. That's the first pullback. That's evidence that it's not gonna go up. Then the down move is what? 50, right? What's the test? 23. So is the volume on the up waves increasing or decreasing? If it's going from 27 to 23, it's obviously decreasing. So where's the demand? There is none. And in the middle, you have 50 versus 23, down and up. Supply's in control. Anyway, the last one, I mean, take a look at this, 27 to 23. After 23, 9. It goes from 27 to 23, which is, okay, a drop. Not a crazy drop, but a drop nonetheless. Then after that, 9. So, I mean, it's not, this is a hinge or whatever you play, a flag, whatever you want to call it, it's going to break, and it does. Boom. Here again, it goes up on 65, then goes up on, what the hell does it go up on? 65 and 20. I would not take this. I know some may say, oh yeah, you should take this. Why? Because there's a red flag. What's that red flag? It's the 65. The 65 is greater than the 64. Pullback volume should not be greater than the breakout or breakdown volume. Here it is, and that's your first, at least for me, I say, back off. Even though after that, it kind of proves itself with a retest of only 20, showing that it's decreasing and is less than 1/3 of the breakdown volume, it's still a no-go for me. And then it just breaks down, goes lower. So again, this was the very nice trade. Breakdown, you want to always check the first pullback. The first pullback is like, I'm not sure, but what to call it, it's like a clue. And when it pulls back on 27, that's a really bad sign for the bulls. That's like saying, I got no response. This guy punched with a force of 181, and this guy replied with 27. That's a weak reaction, action, reaction, or response. Very, very weak response. And from a low, where the demand, comes from the lows, and there's no response. Then after that, it just dies and pukes. More importantly, how you is how you execute. Look, the tape reading part is one thing, but if your execution is even a little bit off, you're gonna get stopped out. It's that simple. You're gonna get stopped out if you don't know where to put the stops. Because you get the direction right. It's a no-brainer. Like breakout. You're gonna get the direction right. But the stop, like let's say it made a lower high and you moved it here, it would get run. So the way you it's like this. You have the low volume pullback. Okay, you get the level sell, and then it has to go above here. or above the base. What Wyckoff would do was he would put it like 1 to 2 boxes. So his stop is pretty high because he knows, he knows that there's no indication of a change of behavior. So the chances are it's going to go down. There's no accumulation. There's no change of behavior. It's going to go down. So the only way you can mess up is by not knowing where to put the stop. If you know where to put the stop, that's the majority of the reason why folks get stopped out and lose I think the majority of this has to do with stop placement and the underlying fear of loss. The underlying fear of loss controls where you put the stop, and I think that's the major problem. Because anyway, where was I? So I mean, if you want to think about it, it's basically base plus 1. So always have your stop at base plus 1. So it breaks, you have a base plus 1. Break, base plus 1. That's what it is. He put it base plus 1 or base plus 2, but I mean, you could just put a base plus 1. You could even, or you could do breakout or breakdown plus 1. That'll work also. So base plus 1. Over here, base minus 1. So like here it would be base minus 1. So stop would be base minus 1 right here. And that's pretty hard to get to because you can do all the shit over here and stop folks out, but to take out these levels are the low of the accumulation or reaccumulation. It's not easy to take them out without having distribution up first and then breaking it. Anyway, so where am I? So how to execute this? You get down here, up, take the low volume, pull back wherever you want to enter, but you have to have like, you can have breakout plus 1 or base plus 1. Okay? Breakout plus 1, breakdown plus 1, and that's all. All right, now let's move on to the next market. This was actually not an easy trade. All right, it was a no-brainer, like in terms of, I'm always saying this, so I don't know if folks listening or not, but you gotta have levels, right? If you don't know the levels, you're gonna fuck up. And then the next important thing is you need to know stop placement, because all the time, if you take a look at folks, they typically get the direction right. They do get the direction right, but it's over a longer period of time. And as soon as the entry and the stop go in, that stop is what is the stop placement is inaccurate. Why? Because there's what they call keep a tight stop. That's the worst advice anybody can give you. Whenever you see that, keep your tight stop or stop loss or this, that, take a look at what Wyckoff did. His stop was absolutely not a tight stop. I mean, you can take very clear evidence of where he would put the stop. There's no way you can say it's a tight stop. And tight stops are why trades don't work. Anyway, so it goes to a level. This is demand level, and so does this as a change of behavior right there. Bang. All right, now I wanted a base to develop, and guess what? That's what happened. Right here, I get the indication that a base developed, and it made the higher high right there. So I know what's going to happen now. Like, so, and if you see where they targeted, right here, is a signal, get in, because these guys already got in. This is their print right there. That's 41,000 contracts on the S&P. After that, it breaks. So they were right, or they got in prior to the up move. So these guys are, they're gonna get theirs, right? I mean, they're in. They're buying the demand. It's in the demand level, in this area, this zone. So this is why they got in, came back, buy some more, and then it's a base, or everything is there. I think even the spring is there. If you take a close look here, right, this is the low. It's a perfect spring. See? So, I mean, I don't know. It's just, that's the situation. Anyway, so then what happens? So it goes up, it retests. It's a very deep test. And this is how slick the market is. Because this thing right here, this high, right? That high right there basically got folks to move their stop under this level. That higher high made everybody move their stop under there. Okay? If you're a breakout trader, your stop is there. If you got in on the pullback and made a higher high, your stop is there. Now, what they did was pull the market back, and they did a spring right here. You see this wick? This is a spring of this low. That right there is a messed up situation, because that right there targeted the stops, retest, and then, got out. So the key here is when you have the higher high, the market knew all stops went up. All stops here, here, here are up here. Breakout, this is the high, made a higher high, made a second higher high. So a lot of folks saying, oh, break of structure and all this, that, whatever. So this is your break confirmation, where you're going to get in. And they basically ran the stop, retest, and then did a rally. So this type of trading requires much more skill. Yeah. And it goes to target. Okay. So that's all really there is. And how you know there's a problem up here in this rally? You know there's a problem because of this guy. You see, you cannot have the highest print at the top. Anytime you have the highest print at the top, that's supply. So you have 2, 23, 16, 26, 17, 25, and then 32. Why is 32 at the top? It has to be supply. If it's at this level, it's a breakout. If it's here, it's accumulation. If it's up there, it's selling. Okay. If it's at the extreme high, it's selling. It's supply. It's distributive. Now, that doesn't mean that it's going to go down like it did here. It could mean it just pulls back, and because it's actually what's known as minor climax, which you have on the tops and bottom tops of bars here, and then it could just pull back. It could have caused the pullback and then get the next rally to go higher. It could have done that, but instead it just sold off. So how to trade this? How to trade this is you have the base, you have demand level, right? And then boom, all right. So the signal is there, you're ready to buy. First thing is, where's your stop? You must focus on the stop first. If you don't focus on the stop first, I think that itself is an error if you don't focus on stop first. Because, I've seen this multiple times, that if your mind is entry focused, it will be driven by FOMO to get in at higher prices. But if your mind is risk focused, you will let the market come to you to fill you or not fill you. because and the better approach is actually to be stop focused or risk focused than to be entry focused. That's why a lot of times when they say, entry, then when you put the stop, no, stop, you have to think about the stop first, because your risk will be, you will actually get almost the perfect entry, a lot of the times almost a perfect entry if you're stop focused. That's just an observation. You can try it. Like in your process, whatever your process is, if you look at the stop first and then you do a count and then execute the entry, you have much higher chance of getting in at the extreme lows, at the best prices. It's just best practice. Anyway, so where to get here? Okay, you have this, right? You have this base. So you can get out at one below the base, right? So one below the base. No entry here, but you have to use the damn base. Yeah. All right. Anyway, and then the other thing is when it makes that higher high, be very careful of putting your stops up here. Why? Because look what this folks who put their stop here, they got taken out here. Simple as that. All right, that's all, folks. Again, if you want to follow along, all you need to do is use any charting platform that has point and figure and a footprint. But you don't even need to use a point and figure. You can use any footprint. The combination is you need a chart for levels, and whatever you want to use, a 4 hour or 3 hour, that's fine, right? I prefer Renko because it just gives me a lot of clarity, and that's what I need. I hate those bars that have too many bars and all that craziness. It's very clear. Look, this level did this rally, right? Don't you think there's going to be a response over here? Obviously, there's going to be a response. Just like when this thing goes up, there's going to be a response right here for the sell side. Why? It's the biggest volume in 19 bars. Clearly, there's some selling up here. So if it comes back here, there should be some selling. All right. There is one other thing I wanted to bring to your attention. Forgot what the hell it was. I think I think it was the market breadth. I think I was concerned about the market breadth. All right. So far, I don't know if I'm going to wait for this reversal. I want to see how low it goes. This 1297 is not a good sign. Okay. But I want to see if it goes red. Market breadth. If this thing goes to like 1500, there's a problem. But I want to see if it goes negative first. Like, I don't know what I did over here in the past. Well, I probably deleted something. Anyway, I think I deleted some stuff by accident, but I don't know. Oh, you see, this market breadth catches the turns. Amazing. All right, but this is for like bigger moves, like the entire swing, and that catches the entire trend up or down. So that's something that I worked on quite some time, and found it. Basically, figured it out. So anyway, let me see how big this is. This is 1297, right? This is bigger than 1, 2, 3, 4, 5, 6, 7. Oh shit. This sell wave is bigger than 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7. No, this can't be right. 8 waves. This is bigger than the last 8 waves. If this yeah, I don't know. This thing is, there's definitely a strong selling wave here. And you have had this low go to that high. So the trend, and there was a correction here. Yeah, I'm going to see if this gives a change of behavior signal and then pulls back on a springboard. If that's the case, the market is very likely to turn on the daily chart and give a very nice down move on the daily, which is a big move. And yeah, that's all. All right, take care, guys. Bye.